Welcome traders. Today we look into the fair value gap strategy. What is a fair value gap? Fair value gap, or FVG, refers to an imbalance or inefficiency in the price, often created by sudden and strong moves in the market. This gap is characterized by a lack of trading activity between certain price levels, often visible as a gap between consecutive candlesticks. FVGs occur when market makers or institutional traders fail to fill all potential orders in a price range, leaving unfair value areas. Traders often consider FVGs as levels where the market is likely to retrace, as the price seeks to rebalance or fill in the inefficiencies. How do we identify FVG on a Forex chart? First, look for an area of aggressive price movement. Second, the location should be in between 3 consecutive candles, with the only exception being if the first or third candle is engulfed by the previous candle. Third, check if there's an imbalance between the 3 consecutive candles. Important criteria in identifying and trading the fair value gap include 1. The strength of the move, and 2. A fair value gap should be traded in favor of the trend or in a case of change of character in market sentiment. First, you identify the trend of the market. Second, you look for areas of aggressive price movement for possible unmitigated fair value gaps and mark them out. Then, wait for retracement to your marked out zone and afterwards go to a lower time frame for confirmation and entry. If you take your structure analysis from the 4-hour time frame, it's advisable to look for confirmation and entry on the 15-minute time frame. Always go down at least 2 times the time frame in which you interpreted market structure for confirmation and entry. Here on the 15-minute time frame, mark it from a downtrend change character, signaling a potential entry. Look for a support level or FVG zone on the 15-minute time frame for entry and enter on the formation of an opposite candle within your zone of interest, which was previously marked out. Let's look at more examples on a live Forex chart. Here, the Euro-USD market was on an uptrend, printing higher low and higher high and eventually formed a lower low, changing its character from an uptrend to a downtrend, signaling opportunity for a sell trade. First, we mark out our fair value gap zones and wait for market retracement to our zone for possible entry. Now, market is approaching our upper zone, and always make sure our marked out point or area of interest is located in the premium zone of the Fibonacci retracement level. Now we wait until we see an opposite colored candle signaling rejection within our FVG area of interest. And now, a hanging man is formed. If you want to learn how to trade the hanging man candlestick pattern, check out our videos on YouTube. But for now, let's continue. So we proceed to a lower time frame for confirmation and entry. Here on the 15-minute time frame, we can see market was bullish, creating higher highs and lows, but on getting to our 4-hour FVG zone, market failed to create a new higher high. Instead created a lower high and then a lower low for a change of character, giving us an insight that market is probably changing direction downwards, ending its upwards movement, and this is the confirmation we want to see. Market changing character or breaking structure, signaling opportunity for entry. Note, you trade the Forex market always on probabilities and not certainty. Moving on. Now we mark out our possible zones of entry, either a resistance zone or FVG zone if any, but for this example, we mark out our resistance level and wait for entry. We enter on the formation of an opposite colored candle on our marked out zone and place stop loss a few pips above entry, then target the next support for TP or target 3 or 2 times what you're risking. Afterwards, market kept going down, but you don't have to be greedy in the market to be profitable in the Forex or stock market. Secure partials when necessary and use break even to capture what you can. If you learned something from this video, hit the follow button and subscribe to our YouTube page at DMFX Trading. Happy trading!